Today, we're going to take a closer look at why Nvidia took a massive dive right before the market closed. We're also going to look at various earnings. Supermicro was down roughly 11% after reporting earnings last night. ARM just reported earnings after hours. Qualcomm down roughly 3% after reporting earnings. Astera Labs reported yesterday. AMD is green after earnings. And we're also going to look at some other AI stocks and semiconductor stocks. As you can tell, we have a lot to discuss. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right. So first, let's start off with Nvidia. Nvidia was pretty much green on the day. And then around 3 o'clock, the stock took a nice dive, right? From its overall highs of 2 o'clock to the bottoms after hours, it was down roughly 3.3%. So not necessarily a crash, but a movement like this, especially for a big company, is very, very rare. Now, I'm going to be honest, there's a lot of little news. So, a few things on X. There were some reports that Bloomberg and other entities, I couldn't find the link. So, those could just be rumors, but that there was an article that data centers were going to start slowing down on GPU orders. Now, if anybody sees that article, let me know in the comments below, but I'm going to call it right now. I believe that if that's the reason, it's extremely, in my opinion, fake. The main reason is we just heard from all these big players in the past few earnings that they're compute constraint. They're power constraint, but they're also compute constraint, right? So it might be some fear because I think Microsoft's CEO recently said that they had some form of AI chips just laying around because they don't have the power. So you can kind of see the negative fear happening from here, from this overall maybe over investment in AI. Again, I don't think that's the case. And if that's creating a sell-off or it's going to create a sell-off, then I'm willing to look at that opportunity as a long-term investor. Now, there are some other things that are appearing. Now, it does seem like some more insiders are selling. Jensen is selling, and I forget, and other management positions are also selling, as they just reported. Most of these are scheduled sales. So, and the amount, $42 million from Nvidia CEO. This guy owns billions and billions and billions of dollars of shares. 42 million is nothing, right? So that wouldn't scare me at all. If you're scared about insider selling, then definitely recommend looking at the size of the selling and the size of their overall position. It's like you having a $100,000 position and selling a few $100, right? So it's marginally unimpactful. The other thing is there were reports that Jensen, in a New York Times article, mentioned that China will win the AI race. Now, I kind of looked at the article and they don't really try to explain what was the context behind it. They just said that during a video summit, that's what he said. I think if we understand the concept of where it was said and how it was said, what were some of the few questions asked beforehand, um, we would understand a little bit more and be like, oh, look, I understand why he said it. But the fear could be, if that's true, if Jensen is showcasing that he is fearful of somebody else winning the AI race, then that means that someone else might win the AI chip market, right? So if that's the case, then that's another reason the market could be down. But there was a statement from Nvidia CEO Jensen Huang. As I have long said, China is nanoseconds behind America in AI. It's vital that America wins by racing ahead and winning developers worldwide. Jensen can also just be trying to play a form of game where it's like, hey, if you don't let us sell to China, it could definitely impact the Chinese market being a big player in the AI space opposed to the United States. So much here, right? And it's like nothing is really sticking. And that's the fun thing about investments sometimes. It's like you have these volatile days that make no sense. But regardless, I think as a long-term investor, I have nothing to pretty much worry about. Now, what I want to look at next are just some quick overview on earnings, not deep dives, but very quick overview. We're gonna have Supermicro, who was down 11%. We have ARMS, who was up about 3.5% after hours. Qualcomm, which is down roughly 2.6% after hours, and Astera Labs, which reported yesterday and was pretty much it was up a nice 1.5%. So here I'm gonna start off with my slideshow, but first, if you want to join the community of AI and semiconductor investors, the first place to start is by subscribing to the channel, get free daily videos and coverage on popular AI and semiconductor stocks. Now, if you are more than just curious about popular AI and semiconductor stocks, I would definitely say check out my membership at whatthechiphappened.com. Right now, I do have 50% off your annual subscription as the membership is starting. We're about to reach 100 members. And once that happens, I am going to pull off in this offer little by little. But this is if you want deep dives on semiconductors and AI stocks, if you want episode slides, if you want monthly live Q&A, if you want a community of serious investors, and much more, that is the place for research the AI and semiconductor industry. Now, let me give you a tease of this is very little of what a very small visibility of what I kind of do in that community. So Supermicro here, breakout quarter for them. We saw the stock was down roughly 11%. But first, let's look at the bullish sense. Bullish sense, they have a really strong guidance for quarter two, 10 to $11 billion. Massive, massive growth thanks to the GB300, driven by a last minute GB300 upgrade. For the full year, they're expecting about $36 billion. They mentioned that might be conservative on their end, and they secured about a $13 billion backlog on GB300 products. Now, again, if we go back to Nvidia, if there are reports saying that Nvidia's GPU sales are being ordered less, then I would just showcase this slide right now to those bears. Now, the big reasons, the major kind of critical headwinds impacting Supermicro, in my opinion, is first, margins plunged like crazy. Margins were 6.5%, declined 300 basis points, the lowest level in recent company's history due to a strategic large design win. The company mentions, look, we're going to make some big sales. Unfortunately, these big sales come with lower margins, and the sales become a little bit more unpredictable as well. But they have two 10% customers in quarter one. And this is going to continue. Some investors are not happy, right? Because margin, this was what, in the teens, mid-teens, just a year or two ago, and so much has changed. I can understand why the market hates it. Now, in the long term, they believe they have the opportunity to go back to those levels, but how long till that happens, especially as competition is picking up. Now, let's jump into Astera Labs, right? So we saw what were some of the good and bad for Supermicro. Let's look at Astera Labs. Astera Labs, the bullish case, they mentioned Scorpio X is ramping, and it's moving from pre-production to volume production in 2026, representing a significant step up in dollar content per AI accelerator. They also mentioned PCIe is gaining momentum. Over 10 AI platform providers are using it. And one of the most recent wins was Qualcomm's AI 200 inference racks, which are a public key win and representing a multi-generation opportunity. They also kind of gave a timeline of UA Link with early revenues expected in 2027. So they are definitely moving in this AI connectivity race. Now with Qualcomm had a lot. And I actually, while I don't own the stock, they did have some pretty cool things. They mentioned the data center market. They pulled revenue 1 year ahead because of their AI accelerators. Originally, they expected data center revenue to come in fiscal year of 2028. Now they expect in fiscal year of 2027. Automotive revenue hit 1 billion quarterly revenue for the first time. That is pretty impressive. They also are significantly ahead of guidance in AI smart sales, and their long track targets are on track for fiscal year revenue of $8 billion for the automotive market and $14 billion for the IoT market. So very, in my opinion, long-term, if you are a Qualcomm investor, nothing too scary. Maybe we have to get more answers about the AI accelerator. I will look at the Q&A session and do a deep dive on the community later on today. So that would be something I'm going to be focused on. But overall, we definitely see a nice long-term opportunity for Qualcomm. One I don't own though. Now, ARM Holdings key findings is AI compute demand continues to grow, and the data center momentum is still improving. Neoverse data center royalties more than doubled year over year as hyperscalers all deploy some form of ARM-based custom silicon. So ARM, to my opinion, is always an expensive company, one I personally don't want to own, but they're definitely moving in a great direction here. So those are kind of a quick preview on some of the earnings, a lot of great information. I hope you guys enjoy it. Now, next, I want to talk about AMD. AMD was actually green today. And if you watched my episode yesterday, I said the following. I thought earnings was boring because if you've been following this channel, you know everything that was discussed yesterday. And everything that was discussed yesterday, while it was boring, it was, in my opinion, what you needed to hear for the long-term bullish thesis. And that's that the MI450 is going to do really well. And in the process, the MI355 is going to ramp up and create sequential growth. That's what we got. And that's what investors like. Not only investors, analysts, we did see a nice amount of analysts increase price targets. We see some price targets of up to $300, others at 290, 270, even some more at 300. So analysts were happy with earnings, and I'm gonna guess after their November 11th financial analyst day, analysts are gonna get even more excited if the company shows a growth in TAM and shows more information about the data center space. So stay tuned for that episode. Now, the final thing I want to take a closer look at is tomorrow we do have IREN reporting earnings. The stock was up over 15% today. In the past 5 days, the stock is up over 30% after announcing that Microsoft deal. This is going to be interesting, right? Because you're pulling up a nice amount of revenue of stock-based stock price action a day before earnings, a few days before earnings. I'm just curious to see how the market will react tomorrow, right? Is momentum going to still go? I'm hopeful that our investors are excited, but now this is sitting at a market cap of roughly $21 billion. I am actually pretty excited because it makes CoreWeave look cheap, in my opinion. CoreWeave has a massive amount of data, of power, of active power, of compute actually already available, and they're sitting at about $56 billion. I think the more these other AI stocks get, I wouldn't say pumped, they get excited in forms of market cap and they continue to grow. It makes CoreWeave look cheaper and cheaper. And we believe, while all of these can win, my favorite one right now to my risk to reward ratio is CoreWeave. So I am pretty excited to hear about IREN tomorrow, especially as it's going to be a great indication, especially since next week we have CoreWeave and Nebius reporting earnings. So maybe a nice quick preview. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all tomorrow.